Have you ever felt?
Are you listening? Damn.
What's up, everyone? This is a new episode, a new update of the crypto market, Bitcoin, what is happening with the price and in space in general. So it's interesting that, like yesterday, I was talking about the areas when we can have our price and going in because of the collecting of the stop orders below and above the certain levels of the support and resistance, and it was something like here. So we went down, we basically pinned through the area which I mentioned before once, and then we went up. So didn't go to this area but exactly followed the arrows which I drew. So far we are again in the same channel. Technically we may actually go now to collect this area or stops on this area, and it would be very surprising that that would mean that my tech analysis is correct, even though it's really dumb, because I wouldn't expect this to be following this exactly like zigzag simple behavior. I think that will more traps on the way, but if it would do like that, that would be nice. I would think that everything is going according to the plan. Generally, I shall mention this behavior of the price in a daily chart because I guess that let's go to some other like this. Interesting that maybe actually 4 hours is even better, like this. So you may notice that we had like a double bottom here potentially, but I have a feeling that we will not have this as a double bottom, but this will be the first bottom of another double bottom formation, which would have eventually potentially, right? So we may go to this level again, and from this point we will go up. It would mean that we will not break 3,500, but we'll go directly from that to something like 5,000 and a half. Right? Is that like 1,000? Yes, 5,000 and a half, somewhere like it's too much. Wait a second. So it's 3.5, 4.5. Yeah, maybe a little less. Maybe like 200 or something like this, and it's possible, really likely to happen. And also, since we don't have too much of the volume trading activity in this level, so we can easily go to 5,600 eventually, and then we'll form this bottom. As soon as we'll reach it, I guess we can make, let's actually draw it, so we can make some kind of cup and handle formation, because this will be the strong level, and we'll bounce from that, and eventually we will make even stronger. So from 5,500 it will be 2,000, so 7,500 as the target for this pattern, I think. So we'll break quite a lot, and eventually it would be very promising for the next bull run. Of course, it's not even 50% chance this to happen. It's just one of the potential scenarios, but still very one of the very likely ones that may happen with the price. So you can see now, especially on the daily again. So this was the first bottom, and then we are fluctuating around that. We'll still have a chance to go below this level. So I wouldn't really talk about the altcoins today. Not so much happening, and mostly it is the same activity as Bitcoin. As soon as Bitcoin goes up, all the altcoins go up, and the vice versa. What I was going to say today, in addition to this update, is that you know that we currently have a lot of the traditional markets, like institutions, coming into the space, Wall Street and everything. And the thing is, we are experiencing the similar event, similar stage with crypto as with a lot of other assets we had before. So, and the idea is that currently we have the Bitcoin limited supply to 21 million dollars, 21 million coins, and some of them even lost. So the scarcity should push the price of Bitcoin up. But on the other hand, if the institutional investors will come to the space and they will start to put a lot of derivatives on the asset, like even futures we have now already, that would sort of dilute the overall asset value. Like, instead of 21 million bitcoins, we'll have 21 million bitcoins plus 21 million paper bitcoins, first layer derivative and then second layer derivative, so we can work with that as with the fractional reserve principle and have like 10 times more than the actual Bitcoin. And would have to be careful with that, because first it would not make the price go up, and that is the reason why some people are against the ETFs and institutional investors coming into the space. And second is that when you have the paper contract on Bitcoin, when you don't have the actual physical Bitcoin in your wallet, it means that you don't have the rights to use it. So basically you don't have, for example, forks, you don't have the access to your private keys and everything. So it means that it doesn't really serve the initial purpose of Bitcoin. So when and it's actually quite dangerous. So like if the company which is dealing with this will have some issues, will like go bankrupt or whatever, or just exit scam, the things can happen like even like this on this order. So you may be ending up into the condition when you will lose your coins. So just the same thing as with, for example, Tether. You better stick with fiat when you're trading your bitcoins instead of going with Tether. But with ETFs and paper bitcoins, you better stick with physical bitcoins instead, and just hold in your cold wallet or something, and then you will be safe, and you will have your forked coins if there will be any. It's an arguable thing about like is it good or not, but I mean it's still better to have some profit than give it to somebody else as soon as you are the owner of the asset. So that is it for today. A short update. Today I had the 2 hours podcast episode with Ken Bozak. Please go to his webpage and look at the video which we had together. It was a lot of fun talking about crypto with him, and I appreciate he's doing that, like talking with podcast, talking with strangers, something like that he called it. So great stuff. Also has a lot of different other content, interesting things on Twitter with him, so please follow and leave a like on this video as well if you like it, and subscribe. I hope to see you tomorrow in the new update, as we do daily with some news and everything which is interesting in the space. Safe trading, guys. Goodbye.